Hello, welcome traders. This is kind of like the volatility of the paradise for traders. We need volatility or markets to move. And when you have systems like the algo person optimizer, which we can figure out what trades to take and what trades not to take kind of thing. What we have looking at your screen here, before we begin, I'm just going to tell you what we're doing. This is the kind of thing that this market is best at, volatility. We're going to look at the algo optimizer right now. This is a small 2-minute time frame. You see, we just went long the market right there. A new fresh trade in here. What I'm going to point out is a couple things. A, what the market's doing for day trading purposes, and then what the overall market looks like as we head into the weekend. So if you're interested in longer term direction, some of the metrics or measurement tools that we can get kind of a clue as to what sectors and what's happening here kind of thing. Is this the buying opportunity, or is there's some more declines coming? That's what we have to address, and that's what I'm going to point out for today. In the meantime, this is a special volume indicator, and what it does is it shows, just like it's a diffuser histogram. It shows momentum on the rally as the market moves up. It shows that there's a loss of momentum of the move. So if it takes long positions, you may not want to as a discretionary trader, but certainly when it takes a short trade, you'll notice that the momentum of the volume was losing its positiveness, and the trend of the volume was starting to move down. Now, on balance volume didn't show that, and on balance volume in this environment is not as efficient as this proprietary volume tool, which is exclusive for the person lifetime package traders. So what basically Algo Optimizer does, it allows us to say, well, in this environment, what's the best holding period? You'll see this particular trade went long, and it actually got close to the profit target, came all the way back down, it stopped out, and then went back up. But then it got back up right on that horse, which is tough for a lot of discretionary traders to do. It took its potential, again, trailing stop function. It went long, took a little hickey, and then finally it went short, and then it gets out at the trailing stop. So if you didn't have a trailing stop, it would be kind of a problem, right? This automatically enters, places your stop, and gives you ideas of what the outlook is, and the outlook means profit target. So on this new fresh long position right here, the stop is there and the profit target's up there, and then or it'll get out with either a new fresh sell signal, and that's why I don't really, we just let these kind of systems go. All right, now what about the overall market? What I wanted to present to you guys is look at what we have in the marketplace, and I want you to focus on this column right here as far as weekly sell signals, what the current trend is, and weekly high close or low close doji column is. So if we look at this, we'll notice that most of the stuff, like for example, the steel sector, SLX, OIH, oil service, USO, the only thing that's really positive on our screen right now for a new, fresh weekly trend signal is the PPS indicator on utilities. Now, that's not an aggressive play and tell me that the lows are in on the U.S. equity. Now, I'm going to go down this. I want you to focus in on, once again, these three columns here, and you can go over and look at this stock and the sectors. You'll see from telecoms to transportations to regional KIE, the insurers, KIE is insurers, KRE is the regional banks. There it is. Down, 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 down. UNG is up. That's it. We have TLT is still down. Spiders, semiconductor Qs, aerospace defense, biotech, builders, materials, energy, financials, industrials, technology, consumer staples, healthcare, consumers, discretionary, metals, and miners. Down, 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 down. Not a very warm and fuzzy feeling in the marketplace. How about individual stocks? Well, these are leveraged ETF, and the only thing that's generating a new, fresh potential buy signal for the week would be, and that would be the week concluding Friday, October 19th. Option expiration is Doug. and that's an inverse bearish ETF, which means when energy stocks go down, that goes up. All right. So if we go through, the only other thing that's in an uptrend is volatility products, VXX, UVXY, TVIX, and again, the VIX itself. SVXY is the short ETF. All right. Now, let's go on down and look at home builders. Everything's negative. In the materials, heck, what was positive like BHP, and here's what I'm referencing, and by having you look at this information is so that you can get a kind of a testifiable bit of not just the health of the market, but where the leadership is. What was actually in a buy signal, it did go up. It maintained strength for a little while, but now it's generating a sell signal. Do sell signals work? Well, when it gives a sell signal, it either indicates downward bias to sideways, downward bias to sideways, downward bias. So yes, there is relevance in those PPS sell signals, which is why we look at those to help not just the breadth of the market, but what the market structure is doing as far as bullish and bearish momentum. Steel stocks is down. Look at the energy. Anything that was green, meaning it was, let's take a look at what tickles our fancy. Chevron, for example, CVX, widely held, right? So Chevron's been in a weekly buy signal. There it is. And it has a bias that if it's just now starting to eke below its moving averages, and it was at a threshold earlier this morning, probably around 118.05, by the way, that was warning us that it would now flip into a sell signal. Conocophillips, COP. Guess what? Here's your arrow. It is, and I'll give that to you. There it is. So you can clearly see Conocophillips is generating. It's at the threshold of generating that sell signal with the person market catcher or relative strength weakening. I mean, that's amazing, right? The stock market's down and this thing's weaker than the stock market. Wow. So there is anything that was positive is now rolling over to being negative. Here's Hess, which had a nice little run, had a buy signal, it went up. Now it's generating a weekly or warning of a reversal from bullish to bearish trend, right? Oil and gas exploration, you see a lot more stuff turning negative. Oil services, a lot of stuff, whatever was green is now turning red based on today's Noble Energy, Heinrich Payne, and then Halliburton. They're your weekly sell signals in focus right here. Okay, there's your weekly sell signal. So we go into financials, everything's still negative. You look at the regional banks, negative. We look at the insurers, all negative. We look at the broker dealers, only one stock's at least in an uptrend, and that is the CME group, because as the market volatility reigns supreme, people trade more in the futures and options, and so therefore you get a little bit more maybe movement and trades, activity, transactions, and what does that do? They make money on that, right? It's a publicly held company. Credit cards, everything's negative. Industrials, the two positives in that market were CMI and Boeing, and they're now forcing over into new fresh sell signals. Everything's still negative. Look at the aerospace defense. 1 triple L, 3L Technologies, only one stock in the whole sector. And I don't know exactly how bullish that really is, considering it's in a pretty much a sideways trading range. But it went into a sell mode last week and then flipped right now this week into a buy, which means it's in a trading range. The entire sector of technology, everything is down except for Verizon in the telecom space. And Verizon right now, VZ, I mean, it's been in a buy way over here since April. It just isn't going anywhere. It's in a sideways range. So it's still positive. That's what we're reflecting. But either all its other counterparts in that space, negative for the week. Semis, everything negative for the week. We could take a look at Intel and say, well, maybe Intel's going to turn around. Well, it did at one point this week. It rallied and it's now failing, and it's still in, as I was defining, it's still in a sell signal. There's the sell signal. So until it actually, and the trend is down, right? So we don't like to buy and get ultimately bullish in the market right in that point in time until we see the higher time frames turn. So a tradable low is what we've been saying for our advisors and investors, and not a investable low. And I think that makes sense, right? In the consumer staples, we've got Church & Dwight. If you're not familiar with CHD, they make baking soda. That's their thing. Arm & Hammer baking soda is Church & Dwight. There it is. Clorox. We need, you need Clorox. In Jupiter, Florida, they're adding chlorine to the water to clean out the system. It's like, it's not good for fish tanks, but it's okay for you to put, and use your coffee maker. I'm using filtered water, actually. I don't buy that story. But anyway, if Big Brother says it's okay, it probably is, right? So at least for me, gang, I prefer to use bottled water at this point. Anyway, here's the story. Clorox generated a sell signal, pops into a buy signal. That's, neither here nor there. The entire sector, Hormel, the maker of canned chili or Spam, it's actually probably got a little bit more strength if it can break out of what we would consider this white line in the sand, which is a relative, the last conditional change. The relative strength is improving, so it's outperforming the overall marketplace. It's defensive as well. P&G had positive earnings. It's breaking out. It's been in a range. It's got a long way to go before it hits highs for the year. I'm really surprised that the rest of the sector stocks in that space of consumer staples, they're mostly down for the week. Take a look at your consumer discretionary XLY. Comcast is the one lone ranger kind of in this space that's going to generate a weekly high close doji on improved relative strength and okay volume action. And there's the volume trend right there, the person volume indicator. So maybe Comcast and Verizon. So the communication stocks are looking good. But look how mixed the trend is for a lot of these names. Look at retail, XRT. The majority of them are all down. That's not positive. By the way, I want everyone to kind of focus before I get through the whole list of stocks here so that you can say, wait a minute, it's either a great buying opportunity or there's some weakness coming. Now, this is the person market catcher in a numeric value. In red is not good. It means it's significantly lagging the overall market. So when you see red like a target and it's in a weekly sell signal, it's no good. So let's take a look at that concept that I just mentioned. So this is target. It's in a weekly sell mode over here. And let's look at the relative strength. It's turning red. It's now negative. As target, and I've done many videos on this and how to use these tools in the market. As the target rallied to new highs, the relative strength versus the market had weakened. Now the volume action was okay, but it started to really get weaker up at about that sell signal right there. And it tried a little pump and then it dumped. The relative strength and the volume were both in negative trend mode. So it does not tell me to be a buyer of Target at this point in time. When would I want to be a buyer of Target? I would want to be a buyer of Target or any stock for that matter that give me the patterns that have been consistently reliable. And it's not just the PPS, but is the relative strength improving, and do we have an uptick or positive, meaning is the volume trend moving up, and do we have that green momentum of volume? And if so, then we can get a more meaningful structure rally out of the marketplace. So when I get the volume after a pullback in the market and the relative strength improving, I can get a more meaningful rally out of the marketplace. That's what I'm looking for here. Now, that's where we would also rely on the weekly higher time frame analysis. A lot of people say, well, the weekly, if it's in a buy mode and then the market pulls back, wouldn't you want to wait to see a daily buy signal to go with the weekly trend? And if the relative strength on a higher time frame is bullish, wouldn't you want to go with that trade? And the answer is yes. So if that's the case, now guys, ladies and gentlemen, look at this. And for professional traders, you probably already are using this and know this. If the market rallies and the volume's weakening, and the market rallies and the relative strength is weakening against old highs, it's a warning sign that something's coming down the pike and changing. The momentum changed in target 2 weeks ago and generated a sell signal. The moving average is pointing down. If we close below that white line in the sand, and that literally is what it is, the white line in the sand that defines the market, whether it's going to rally back up or crash and burn a little bit. So that white line in the sand is a last conditional change, and under the conditions of poor relative strength and weakening volume, it leads the outlook that we could see further demonstrable weakness in the market. Where are we against that white line in the sand? Well, early Friday, and this is a weekly chart, we bounced off of that line. So we've got, whether we close below that line in the sand or not, but that white line in the sand is 82.44. A weekly close below that line in the sand, the market's vulnerable, susceptible, based on the technical indicators, weakening volume, weakening relative strength, vulnerable for a decline. So I really don't care whether it's Amazon, whether it's Apple, those conditions, weakening volume, weakening relative strength, and sell signals and breakdowns of last conditional changes is not a good sign, and therefore we want to be ultimately conservative or bearish in the market. Here's a stock that we were actually hoping to see puke fall, go down 10% when it was trading at 33, which would put us back into the 30 range. It hasn't happened. Why would I be looking at that? Well, for one, the market was weak this week, and for two, we didn't get as weak of a downside move as we would have expected. We're seeing the volume kind of hold up on this decline right here, meaning it's not getting weaker and weaker and weaker like it has over there. And we have this little gap in the market in which is near that $30. So I'm kind of hopeful that we see maybe some weaker relative strength readings in Macy's and we get down to 30. It might take another week or two. Remember, October 19th, Friday, is option expiration, and maybe there's some jockeying going on in the marketplace. Now, where's the strength coming from for this big market move today on Friday? Utilities. Everything relative strength is bright blue, which means bright blue means it's outperforming the overall market. So here's bright blue. Here's the volume. What did I just show you guys? What I would look for buying opportunities, or at the very least not selling. If the market volume is upticking, if the relative strength's improving and turns bright blue, then you can look for buying opportunities. And that's what you have in both the most of the utility sector, excuse me. So there's your strength right there. We see a concentration, gang. Either stocks that were weak are now turning into buys or have been bullish, and it's all the utility space. So take a look. Duke Energy is blinking. If it's blinking, it means it's fresh. It's happening now. It's warning us. It's the warning signal that if we close at this current level or better, it will populate a buy signal. And it just is kind of like a good gauge to say, hey, if one stock in utilities bullish, that's one thing. But when you get all the stocks and fresh new buy signals like NEE, Next Era Energy, that is, it's actually sharing with us that the market is turning around. And again, look at the conditions or the coincident factors. Rising volume, improved relative strength, buy signal, and the market goes up. That improves your odds that you're on the right side of a trend of a market. All right, so let's get down to healthcare and get this thing completed for you guys. I know you've spent a lot of time looking at this with me. Healthcare, it's very mixed. Not a lot of really good stuff. Some are blue, some's doing okay in the healthcare. Bristol Myers looks ugly. It got hit with the ugly stick this week. That's an ugly stick. Look at your daily chart. And look at Bristol Myers. Bright red. Down, 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 down. You didn't want to be buying Bristol Myers. It's been in a weekly sell signal last week, a week ago, and it had more follow through this week. You want to avoid those things. When the relative strength goes negative and you're in a weekly sell signal, it's not a good thing, right? Going on down the list, lots of red. Accordia Therapeutics is the only biotech that's generating a fresh new buy signal when the rest of the world is negative. Transports, everything's negative. One Airlines, Spirit Airlines. You ever taken Spirit Airlines? Okay, so anyway, everything is in the negative right there. Next, gold miners. This is the only thing that's got some mixed results. Home builders, ITB, that means D.H. Horton, Lennar, Pulte, Toll Brothers, all those guys, ugly, and falling like don't catch that falling knife. Property REITs, all negative. Casinos, all negative. Social media, one name in social media of my classification, and it's Twitter. And Twitter, you just saw it blink. It wasn't tricking you. It was blinking because it's on the cusp of not generating an algorithmic buy. If you believe that the markets are controlled by algorithms, a lot of the market analytics help, just like what we've created with the Person Algo Optimizer and the Person Lifetime Package. I mean, this gives you every bit of information and tells you consistently where is the buying and the selling pressure coming from, and give you buying and selling outlooks in the marketplace. This is not a very strong longer-term trend in the market. Software internet, not one single name except for Twitter and maybe, who is this guy, Beozin, and I threw that in, and it just now coming off of that buy signal, by the way. It's got a close greater than the doji to make a high close doji. Everything's red. There's nothing positive that we see a lot. Maybe a little in the telecommunications and in the foreign market arena with all the foreign ETFs, everything's negative. So where's the strength coming from? It's either one of two things, gang. It's either too negative, or we're in a situation where the market's going to remain to be selling rallies and dead cat bounces. So until things really change, not just from the breadth and the volume, but until we get some nice, fresh, new buy signals in a group, or a consolidation of stocks in a group, this market's still under pressure. I hope you enjoyed this insight to what we see for the market and the outlook. Lastly, looking at the advanced decline, we can summarize this and make it a little even more simple. Simply put, falling moving average, 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 falling moving average. NYSE, Dow Jones, Qs, NASDAQ, IWM, and SPDR. Could we recover? The breadth of the market is volume is in the market, is in a very, we're at that cusp where we could rally from here. Note that the Russell, the IWM, which is one that we took a light position on with a defined risk situation and went with some long calls, we are in a buy signal. So are we going to bounce out of here, or is that buy signal going to be negated and we crash and burn? Well, if it crashes and burn, we're going to lose money. And it's not a heavy position. It was a scale in lightly. So with that said, I don't have enough evidence, but I do know that we were near old support and we have an uptick a little bit in volume. So that, maybe by next week, we'll see if we get a turnaround in some of these small cap sector stocks and the January effect takes over. Until the next time, I hope you found the insights on how we utilize these technical tools to give us a better edge in trading. Thank you for watching.